So good morning, everyone. It's a real pleasure to welcome you here today at the French Ministry for Economy and Finance, and this, I would say, crucial roundtable on digital infrastructure at a crossroad, new assets in a changing, and I would say in a challenging world. So I'm Alexis, HOJABR, partner at White & Case, and I'll have the pleasure of moderating this conversation today with you. We are joined today by 4 prominent speakers with truly global insight. Elitza, IORDANOVA, Managing Director, Infrastructure and Infra-telecom, Financing and BNPP. Monsieur Bertrand BORDE, Director and Global Head of Infrastructure at IFC, the World Bank Group. Mr. Mamoun JAMAI, Head of Digital Infrastructure at the Abu Dhabi Investment Authority, ADIA. And last but not least, our friend MEYER, MD at the Royal Bank of Canada Capital Markets. Over the past decade, digital infrastructure has moved from a niche topic to a core component of economic and national strategy. But as we will see all today, there is no single unified digital infrastructure asset class. It is deeply diverse in geography and diverse in its nature. Fiber, towers, data centers, subsea cables. But all of them are becoming critical because they are a link to sovereignty, resilience, and at the end, economic continuity. And for that reason, they are increasingly dependent on private capital, either debt or equity, that is needed to sustain and meet rising demands. We will explore today this topic around 3 milestones. First, that would be the macro trends that are reshaping today this asset class. Second, we will be focusing on the regional investment dynamic. And at the end, we will have a sort of investor view on the capital structure and the liquidity bottlenecks. First, it's the mega trend, and I think I would need the help of the 4 people around me to give us the macro picture. So the question here is, in an increasingly complex and volatile environment, how do investors, either, as I said, debt or equity, assess the long-term value and resilience of these assets? I'll now turn to Mamoun and Elitza.
Thank you, Alexis. Tough question to start with. I think at least from my perspective, what is maybe interesting is to take a step back and look at the deal flow and where the action is these days in digital infrastructure, because that's going to effectively determine how you think about risk, mega trends, and some of the issues we all have to cope with. And I think it's no surprise that the rule of the game these days is really what is happening around data centers, and especially looking at hyperscale and AI. And I'm sure later on we'll discuss whether there is a bubble element to it. But I think it is truly phenomenal what's happening around data centers. The CapEx requirements are absolutely tremendous, and they are causing some issues looking at the debt capital markets, but frankly looking also at the equity. And it's one of the conundrums whereby on the one hand you look at the demand is very strong. You look at the economics of the contract for data centers, the contracts are very favorable, but at the same time you can't help being a little bit nervous, just in light of the capital requirements. And obviously that has implications about how you think about an exit down the road. So I think from my perspective, there is potentially a risk. Some of these assets may end up being stranded. At least that's a possibility in the long run. And therefore, having the right investment strategy, calibrating the economic exposure, and figuring out a path for an exit down the road is absolutely critical from an equity standpoint.
So Mamoun, what you are saying is nowadays the data center is the sexy animal, but turning to Elitza, maybe on that one, do you think, Elitza, that fiber is a dead animal, or is it still alive? And how the fiber fatigue in terms of financing is reshaping the landscape?
Well, it's a difficult question. It's a very topical one, I would say.
We are in the Ministry of Finance, so it's going to be difficult for all the questions.
Fiber was, at least in Europe, the start of the digital infra. And France was in the front run of these developments. And I think it's very important to say France is the most advanced country in terms of FTTH deployment. And it's given as an example by the whole MEYER region it's a successful story, clearly. And why it is a successful story? Because regulation has played a very important role when this whole FTTH deployment started in France. And also, and coming back to your initial question, Alexis, on how investors and lenders will assess the stability of the cash flows in such a difficult and fastly evolving market, well, France made a structure around FTTH deployment, which helps, in fact, to have a strong visibility around the cash flows, with quasi-exclusivity in the rural areas. That's not the case in other countries. And that's another important point to take in mind when we are talking about financing of FTTH and fiber fatigue. Jurisdictions plays an important role in the analysis, and there are countries where things are not going as brightly as in France. And what we can see now, that on top of the huge amount of money which has been invested in fiber across Europe, where investors are pretty full, all pockets are full, and we do not necessarily benefit of very strong pockets diversity in terms of financing in Europe versus the US. Here, we can add another aggravating factor, being that some projects are experiencing difficulties, which of course creates a pretty negative mood around fiber. Now, I want to finish on that topic, I would say on a positive note, because I still believe good projects in good jurisdiction, supported by the right sponsors with a good experience, those who know how to position themselves in the future consolidation, they will certainly still be able to finance their projects.
You raise a very good, I would say, point, which is France has been the very good example in this regard. You know, the France ODP program has laid out, I would say, a very consistent roadmap from the beginning, and with the help of the La Caisse des Dépôts, and the whole, I would say, structure went very well. And it could be used as a very good example throughout Europe when you are comparing, you know, what's going on the FTTH market in Germany, Italy, or even in the UK. Spain is potentially also different. It's a good asset. Could you also give us some color on what we are calling data centers? A couple of words, what is a data center per se, and how even in this area there's diversity?
Yeah, and diversity is probably the word, because everyone speaks now about data centers, but there is no one kind of data centers. And from investment perspective and also from financing perspective, it makes a lot of difference if we are talking about hyperscalers, or we are talking about co-location data centers, or we have in mind the AI campuses, or even the GPU financing, the newest asset class. So within the data center financing concept, there are subclasses, and there is no one-size-fits-all solution for the different classes. And from my perspective, which can be different for investors, the market darling in terms of financing is clearly the hyperscalers. And it started from single asset, greenfield, PF structures, and evolved into big platforms with more hybrid style of financing on platform basis. Of course, the other assets, they have their specificities in terms of financing. Some are rather new territories, the GPU financing, for example, being the most recent topic of discussion, where again, US is clearly in front of Europe. But this is now very topical, very hot discussions on.
I see Eric bubbling there. So maybe Eric, you would like to add also some color and as a high end, I would say data center professional as a banker.
No, thank you, Alexis. No, I fully subscribe to what my neighbors have just said. In terms of a data center universe, it is a beginning. We're seeing kind of new animals. We have seen a phase first where it was hyperscalers business, wonderful business for banks, you know, super great creditworthiness, etc. What will basically differentiate the project will be the creditworthiness of the sponsors. And that's a big difference. And now you've got a number of new clouds, investors, and the question is, are these people going to be able to withstand, you know, possible accidents, delays, issues as they may arise? And I think in as much as we describe what happened in fiber and in fiber world as being, we have met a little bit of a systemic issue with fiber. I mean, France has done a great job, you said it's right. You know, the French FTTH fiber is laid out, so there's nothing to happen. And it will prove very difficult in some other jurisdiction around France to find, you know, additional financing or financing. I don't...
Just holding here. There's one, I would say, dinosaur in this asset class, which is, again, a trend. What do you think about the towers? Is it still an asset that MNOs need to take out of their balance sheet to make it clean, or is there some area where you see towers to be a potential layer of opportunity? I mean, it's a question for all of you.
I think, you know, towers is core infra. Towers has basically been done. It is a core infra business. It is well financed. It's a very successful story of being financed and refinanced and changing hand. And, you know, it is there to remain, and it is just seen now as a very, very core infrastructure asset.
Yeah, and I think it's back to your first question. I mean, at the end of the day, it's important to look at the mega trends, but at the end of the day, as investors, you know, we acquire businesses. You know, the trends are helpful, but at the end of the day, you need to pick the right assets. And I think the same way Elisa mentioned about fiber, it is an incredibly nuanced space. It is the same when it comes to data centers. They're very nuanced, and at the end of the day, you're buying contracts. And I think for towers, it's the same story. Towers are core infrastructure, but at the end of the day, what you're buying is effectively the underlying contracts with the MNO. Some of them have longer duration than others. Some of them have CPI escalation. Others don't. Some of them come with BTS packages. Others don't. And I think that's important. You know, it's important to look at the thematic, which is underpinning the investment, but I do believe that it is even more important that you know, to look at the underlying assets and the underlying cash flows.
Just a word on tower. And good morning, everybody. Delighted to be back at Infraweek. So I'm Bertrand de la BORDE, the Global Head of Infrastructure at IFC, which is private sector arm of the World Bank. So we work across emerging markets. On towers, while it's old dinosaur, boring core infrastructure, it remains very much something which is key and when there is business potential to do. And on your questions, over the years, there is a biotope which has developed around that. As of today, I think it's around 72% of towers which are owned by independent companies, longer by MNOs. So depending on region, still some MNOs have tower, but the direction of travel is more to have these dedicated companies owning them. And also in the biotop chain, you have companies dedicated, for instance, to supplying energy to these towers, companies like Camusat and others. So definitely still a space where there is quite a lot to do.
And that's a good transition, my dear friend Bertrand. But before going to the next topic, is also, Mamoun, what you said is 100% relevant. It's at the end of the day, it's a business, and you have to evaluate a business, good or bad. There's a valuation, I would say, topic. So how much you are going to price the value of the business, and on the top of which you can raise debt. And also, what is important is throughout for those, it's complex asset, it's infrastructure. It's complex asset that it's highly regulated, and also you can be dependent on the MNO if you are investing on a tower co or a fiber co. So at the end of the day, what is mattering is the value at the beginning, but also throughout the life of the business. If you have a complex, I would say, contractual framework, shareholders agreement, the MSA, and all the rest, which makes your life easy or complex throughout the life of the investment, that has to be computed as well in terms of assessing either is a good asset or no. Back to you, my friend. Emerging market, I think we have also tokens. As we said, it's a digital, it's complex, it's not unique, it's diverse. And diversity means not only the Western countries. There's other, I would say, bubbling areas, as I said, is apart from what we call the Western countries. And I hate to use those nicknames of emerging market. What means emerging market right nowadays, right? So if we accept that there's emerging markets and how the situation is different, Bertrand, in the emerging market, let's say Africa or Southern Asia, to be more precise, compared to Europe or the US, how you see the differences fundamentally?
No, thanks. And as you mentioned, these emerging markets does cover a wide range of realities which are quite different. And in some of the countries where we do operate, for instance, obviously in Asia and East Asia in particular, the trends we do see are quite similar to what you were mentioning in terms of the magnitude of investment, which is just unprecedented. The question mark about possible bubble, how quickly in terms of deal criteria, it goes from things which were pretty prudent to quite scary. So we do see that happening in some of these Asian countries. At the same time, there are other realities where quite a lot does happen, but pretty different and different challenges. If I move to Africa, and by the way, on data center, this end of last year, it was around 40 gigawatt of operational data center, 20 in the US, 10 in Europe, 10 in Asia, and less than 1 in the world of Africa. So different reality. And the number I would wish to share with you, really to put this into perspective, is in terms of people who are connected or not, rather not connected to internet. 8 billion population worldwide, 3.4 billion who are not using internet. So which is both quite of a challenge in terms of development, but also a tremendous opportunity on business.
Can I stop here? They are not using, but they are intended to use, or it's a pocket of potential top line, or is a barrier, what you say here?
So you are at the core of the question. If you get a bit more granular on your question, you have around, so 3.4 were not using internet. Is it because they do not have, they are not covered? For 10% of them only, around 300 million people in the world today live in an area where you do not have internet. So it's still quite a lot, 300, but it's 10%. So for this 300, what needs to be done? Expanding network when it makes decent economic sense, otherwise it's satellite. You all are hearing about Starlink, but we already have some other solution like Eutelsat, in particular for Wi-Fi community in remote areas. So that's about this 300 million. But you are left with more than 3 billion. What's happening with this 3 billion? Is it that it costs a lot to use data? Not that much. In fact, in many emerging markets today, 1 gigabyte, you can buy it for around $1. And once with 1 gigabyte, you can go on the internet and browse for 15 hours, or it's 2 hours of video, so $1 to $2. So it's still an issue, but not the main blocking factor. So I see you puzzled. So what's going on? What's going on? It's essentially two things, but the first one is this. Why? Because to connect to internet in these countries, people do it through mobile. Obviously, they do not have fixed connection, they do not have a laptop. And how much does, not only this iPhone, obviously, but the cheapest smartphone, how much does it cost? $100, $80 in some countries, 60 in some, few. But that's huge. As compared, again, $1 to have 1 gigabyte and the level of salary of people in these countries. So today, you have two main issues, but that's really by far the first one, the cost of the smartphone. And interestingly, it's not really going down, because even if progress are made, the more complex are the operating system, the more expensive the device tend to be. So what to do about that? It's about what can be done in terms of further reducing manufacturing costs, even if the trend is more to increase them, in fact. Two, a very interesting question, in particular for us, in terms of regulation. What level of taxes? Many countries will use this as a milk-cow and have taxes of 20, 50, 80%. What the right level of tax when you buy a smartphone? And also in terms of supply and how you help financing for people who need to buy on credit. So that's one bucket. And the second bucket, not to be ignored, is it's not for people just to have it, be able to pay for the data, but what they can use it for. And this, a lot of work has to be done, and it has been underestimated in terms of, developing access and content, be it on, obviously, everything which is with digital banking, with getting information on health, for a farmer on crop disease, taking a photo, sending it, and knowing what's going on with its crop, and so on and so on. And hand in hand, and I'll end up there, it's the last point on which collectively we are trying to work, is when you have all that, you also need for a number of these 3 billion people to work on digital skills and literacy to help them know how to use internet. But again, fascinating topic, I'll pause there.
Fascinating topic, and I think ADIA as a core investor in this area as well. Mamoun, how you see an emerging market or a specific state or country to be a good or a bad, I would say, layer for investment as an infrastructure investor, I would say, broadly speaking?
Yeah, I mean, listen, it's hard to be generic about it, but I think the way we think about it to some extent top-down, in the sense that as a global investor for us, from a portfolio construction standpoint, it's important to have exposure, obviously, to both developed markets and emerging markets. I think the good thing with digital is that, if you're a global investor, the thematics are the same. There are some nuances, but some people are early to the game. So I can tell you that what's happening in data centers, hyperscale, there's a lot happening in the US, and then there's a time lag between the US and what will hit Europe. And then, if you look at emerging markets, you're going to see the same. So if you spot the thematic in the US, you can position yourself 2-3 years in advance to get ready for what's happening in emerging markets. What I will say, though, is that ultimately you need to differentiate to some extent between data centers and towers, because these are really the two verticals. I think fiber, there's not a lot happening in emerging markets. But what is interesting with data centers is that, you're dealing with the same clients. And frankly, a contract with Microsoft in Africa is as good as a contract with Microsoft in the US. So it's a piece of real estate, but your counterparty risk is the same. And I think that's, in a way, that's an opportunity for some of the emerging markets, because you end up having exposure to very strong counterparties in an emerging market context. Frankly, the same apply to some extent to towers. If you look at Africa, and we've been looking at some of these markets, the MNOs in Africa, some of them are actually extremely well capitalized, and you have the likes of Orange, Free, and what have you that are present in Africa. So that's an opportunity for Africa. But at the same time, and I think we have to be mindful of that, the liquidity risk and the exit risk is obviously more pronounced in emerging markets. And that's an important consideration, especially for an asset class like digital, which tend to be a growth story. So you're not relying on yield to recover your capital. A lot of the economics will come from an exit. And unfortunately, with some of the emerging markets, It's either the market is on and everyone wants to get exposure to some specific emerging markets, or the market is off. And then irrespective of the asset you own, it's going to be very difficult to exit.
Bertrand, maybe your view would be interesting as well as the World Bank. How you see a good or a more riskier potential layer for investment in an emerging market region? What is the best and what is more challenging?
There are different ways to respond to this question, but first, fully concurring with Mamoun. A lot of business opportunities, to go to the most challenging of the emerging markets. Asia is a given, but talking about Africa, you mentioned the Orange. In terms of international companies, Vodafone is very much active, Airtel, and then you have the regional African champions, which are really pretty big, from MTN, Axian, Liquid, Wayok, and others. And that's a business which are really growing very quickly. On your point, what we do see in the case of Africa, that's different in the US, where the data center the boom is so incredible that you have liquidity tension. On the debt side, you are good in particular because, one, you have development institutions like us, but also what we do see, recently over the last 2 years, we placed more than 3 billion of bonds for companies like MTN, Axian, and others, and there were really appetite for this bond. So on the debt side, we're good. On the equity side, it's more complex, in particular for the reason you mentioned, is that not only you need to do well, but in terms of exit, it may not be that simple, and if you try to go the IPO route, you get a pretty big hit because it's in Africa, whatever your results are. So that's really conquering on this.
Just you mentioned something which is really interesting. It's a satellite, I would say, industry as a whole and the LEOs. So how the satellite and the constellation per se could at some point be a competitor to fiber, because both of them are a vehicle to transfer from place A to place B, So how you see this being a, I would say, game changer potentially in the emerging markets?
Again, it's a fascinating question with, if you were to ask 10 experts, I think 10 different views on that, and it will be incredibly interesting to see how it does evolve. Where there is clearly no competition and a specific market for, again, we had for quite some time Eutelsat with a geostationary solution, but now obviously we have this LEO solution, much better in terms of latency, with everybody has heard about Starlink and their 8,000 or 9,000 satellites.
Beg your pardon, LEO being the low orbit satellite constellations,
yes.
Right?
Which are much lower orbit, around 500 kilometers, so much quicker, lower latency than geostationary, which are 36,000 kilometers. So where there is obvious complementarity is when it comes to offering connection to ships, aircrafts, oil rigs, which are so that obviously which the MNO cannot do. Where now you question, is it competition or partnership when you are on the ground? And what you do see that, going back to my 300 million people who live in areas which are uncovered, here a solution like Starlink can be extremely interesting, and partnering with MNOs, who otherwise for them it's too expensive to get there. Where now, at the core of your question, and where in particular you get different views, is so far, where Starlink is making money is not so much with this rural area. It's going into urban cities where they will go to the fairly wealthy customers who want to have a backup. They are in Johannesburg, they are in even more obviously in Lagos, even more in Abidjan, or also in some Asias or Latin America countries, where they are, in case their provider goes down for a few hours, they absolutely need to have a backup and they're ready to pay a lot for that. That's a very interesting business. But from here, you can see that the competition can come, and they, may have the Starlink really trying to have as a main customers these more juicy companies. So usually when you ask to MNOs a question, the official response they will give you in the room is that, no, we are partners, and by the way, most of them have partnership agreement with Starlink. Well, when you have the off-record discussion at dinner, the response tends to be a bit different. But again, we'll see. And it's a market, I will leave it there, which is evolving so quickly. Obviously, Starlink is going at crazy at light speed. You have Kuiper coming in, and you have new technologies, direct to device, from satellite to satellite to your phone.
And Bertrand, let's don't spoil too much. There's another roundtable with my friend Ilham Jayesh on the satellite business. So I think that's a really interesting topic, by the way. Finally, and this is our, let's say, final topic that we would like to have the views of our friends here, and to back to what is really central if you are considering being an investor, which is, I would say, liquidity and return, how you call it, IRR, return, whatsoever. So it's how much you're getting back when you are investing 1 penny, €1 whatsoever. So we are all agreeing that the digital platform grew, it's multi-billion euros valuation, and with, as we were discussing before joining you, with what we call bespoke structures. And that makes, I would say, traditional exits and routes narrowing. You mentioned IPOs are difficult in emerging market, but my friend, I think IPOs are difficult everywhere. It's not only limited to emerging markets, and I think the business plan of an infrastructure and in digital infrastructure asset is no good friend for IPOs, generally speaking. So, and trade buyers, MNOs, they are more and more selectives. So to that, in this regard, how you see that the investors are getting adapted? Back to Eric on that one.
Thank you, Alexis. Yeah, very good point. I mean, you know, the growth in size and the equity check that are associated with this new project is just mind-boggling, which means that if you anticipate that these investors do the job at exit, you know, 5 years from now, whatever, from now, it will be even bigger. And what do you do with that? Do you have enough liquidity? Can you do whatever you want? The answer is clearly no. Obviously, it's slightly different in the US than it is in Europe, much more liquidity in the US, but even though the IPO market, you're absolutely right, is open at times, not always, and basically equity check by one party becomes less and less available. What does it mean? It means that people have to be nimble. The good old days of private equity is where you were buying an asset, you're sitting on it, and then extracting cash in an intelligent way, and selling 3 years from now, with a multiple expansion and the thing is over. You need to work on your assets, which means a number of things. First of all, pick your timing. Timing will not be all the time at the right, at the moment of your choice. Second of all, in a lot of cases, what you will see that people will work on the asset and basically get in pieces. Most of the time, you will see businesses that are not single asset, but are made of a number. So you basically can sell pieces, work them, basically make them more palatable for investors. The other thing is you have to find, partial exits. You will have, classes of investors that are more comfortable coming with minority stakeholdings, and that will come. What it means altogether, and I won't dwell too long on that, but reality is exit will not be as straightforward as they were. Most of the cases, they will have to be worked on very, very hard. And as always, the smarter people will get the better results.
So you need good bankers and good lawyers, by the way.
Very much so.
Do you think, but more seriously, do you think we are facing a sort of systemic risk? We all are aware of situations that are complex in France and elsewhere. Do you think that we are facing a systemic risk, or is this something that is just an adaptation of the market to something which is a little bit tougher, I would say?
No, and we're talking about data centers, obviously. I do not believe so. I do not believe it's systemic. I believe that the need is there. Timing may be a little bit different, but I mean, the demand is so high, and basically the money that is directed towards it is so large that it will find its way. So there will be casualties, yeah. I mean, will there be misallocations? Absolutely. But that's not going to basically break the system. If you take one example, I mean, first one thing, I mean, some assets are protected by geography. If your asset is in Virginia, it's around, Greater Paris or in London or things like that, there is huge value to the real estate, to the location. What you see now is with the growth, in the size of these data centers, is a need to come closer to power. So you have now a number of campuses, as you're referring to, or large data centers in the middle of nowhere, in Arizona, in Texas, in Norway, whatever, where you got to spend a few $1 billion putting your data centers there, and then guess what? NVIDIA comes up with a better chip with better things, and basically your data center becomes obsolete. And next door, there's lots of land, and there's the same sun and the same wind, so you can have another data center.
And just on that one, we said that for fiber, France is the best. Really, it is the best. It has been the best for the last, I would say, 15 years, 15 years, and it is continuing to be the best. Do you think that for data centers, the US should be the example, given the size, given the appetite for investment overall?
I believe so. I mean, Europe is a very different market than the US. First of all, it's fragmented. It's different. It's a number of different jurisdictions with a big issue of sovereignty. And sovereignty is absolutely key, and no one is prepared to give that up.
And we have a key investor just next to you. Mamoun, how you see things also when you are comparing the investment in Europe, Western Europe as a whole, and the US?
I think it's complicated. But let me just put some context to that answer. I mean, if you look at the 5 hyperscalers, all 5 of them American companies, they are on track to invest circa $400 billion in CapEx this year. I don't know how many companies in France, so that's, let's say, $100 billion each next year. I don't know how many companies in France can, or frankly, elsewhere in Europe, have the firepower to invest this type of numbers. So I think the problem is that capital is a barrier to entry when it comes to data centers and when it comes to AI. And I think, Europe going to have to be creative if they want to be relevant in that segment. So I agree with everything that got said. I don't think there is a systematic risk. As long as NVIDIA is a $5 trillion plus market cap company, I think we'll all be fine and happy. But there is concentration risk. At the end of the day, you're dealing only with 4 or 5 companies. They are extremely strong counterparties, but God forbid if something was to happen, that will have some broader implications, including when it comes to exit, because we were discussing exit. So I think, from my point of view, you need to be focused. I think cloud, to your point, is different from AI. Latency requirement, network architecture, all these things matter. Not all data centers are equal. Again, this is a very nuanced space.
So I would say bottom line is complexity. I think digital infrastructure is getting more and more complex because it's getting more and more sophisticated. How debt would, in this regard, Elitza play? Would complexity be a barrier or is it trigger here, accelerator? What is your point of view? We have 1 minute left before lunch.
I will then do it very short. Complexity is definitely a topic, and the diversity of the different type of data centers. As I said, there is no one-size-fits-all solution. But what I wanted to flag in the 20 seconds remaining is that liquidity will also be an issue from that perspective if the trend continues with the mega projects we see being announced. Of course, Europe is not comparable in terms of volume comparing to the US, but still, sooner or later, the classical lenders will face the same situation they faced in fiber at some point of time. Pockets will be full, and there will be a concentration. Data centers initially have been seen as a diversification from fiber and towers, and sooner or later, and I would say sooner than later, at some point of time, pockets will be full. So what we are trying to do is to look to creative ways, and also looking at the US, what is happening in the US, to diversify the liquidity pockets. And one of the good examples, and everyone is talking about that, is the nascent ABS market in Europe. We are far from what you see in the US, but still
ABS
it's one of
meaning?
the ways. Asset-backed securities. So, we have two...
Titrisation.
Titrisation, exactement.
Horrible,
Titrisation.
horrible. Titrisation is
And
complex.
yeah, there are two examples already, one in sterlings, one in euro denominated. And it's minor in terms of volume, but it's a trend everyone is looking at.
Listen, we can continue that conversation. I think this digital topic is the best topic. This is what I like really on the top. So one word to thank you again. We have the chance to have that conversation with you. So thank you very much for your time. A pleasure.